Hello and welcome back to On-Chain Reaction. I'm your host, James Bennett. I'm the CEO of ByteTree. Okay, so this week we're going to start by looking at Bitcoin's price. As we know, Bitcoin went to about $58,000 over the weekend before retracing back to $48,000 this morning. This challenges the notion that Bitcoin is a store of value at this time, not that it won't be in the future, but with volatility around 110% for the last week, it's difficult to say that this is a safe place to put your wealth in the short term. I'm obviously bullish on the network in the long term, but store of value 110% slightly stretched in all truth. But with that said, the overall network has been growing strong, and I'm as bullish as ever on the network demand driven price model that we push at ByteTree, where we've seen a huge increase in transaction value up to above $10 billion per day. So just to remind you, about 12 months ago when the price was sitting significantly lower in the tens or teens, I should say, we were seeing at about $2 billion of transaction value a day. You can see in the dotted line there the 7-day moving average for the transaction value, and from October last year we started to see that increase from 2 billion now up to 11 billion after a short correction from mid-January until mid-February. Okay, so we've got a pickup in the price, a lot of on-chain transaction value. What does it mean for miners? On the third slide here, we can see that miners have been making hay while the sun is shining. They have been doing on average $60 million of activity, or revenue I should say, per day, with fees as a percentage of their total income rising up there to about 15%. So the gold line there is showing you the fees as a percentage of total revenues, and I've pointed out this trend before that started in January of 2020 and has continued throughout 2020 into the beginning of 21 and is now sort of even continuing to turn up. So it's to say that fees haven't just spiked in the short term, they've actually also continued to be sustainable increase in revenue for miners. Okay, so fees are higher on the network, but what does it mean for the average transaction value? So here, a snapshot taken from the featured chart section of the ByteTree terminal. You can see median transaction values in the blue here have been rising over the last couple of months. And you can see we went from about $150 early December up to above $250. So for a median transaction, so remember there's about 3,000 or 4,000 transactions in each block, and you take the median value and you take a mean of those rolled over a 7-day average. And what it says is that overall value of activity being transferred or value being transferred over the network is increasing, and that's really positive for the longevity of the network and the space. So looking at this now at a sort of higher level, bird's eye view, here in gold we can see the total US dollar value of low value traffic, that's the bottom quintile of traffic, versus the top quintile of traffic, which is in blue, high value traffic. I've pointed to this trend before and said that really the core activity was what started pulling the price up from January last year. You can see that gold line diverging from the blue line, and then as we got into the late part of 2020, that whole institutional move happened. Michael Saylor allocated with MicroStrategy. We saw the likes of Paul Tudor Jones coming out, Dan Tapiero, Bill Miller, all saying that they were buying Bitcoin and bullish on Bitcoin. And there we saw the high value traffic really pick up that blue line, chase up towards the low value traffic. It stalled after that 9th of January short-term high that we saw. Traffic stalled and then picked up again as we drove up towards that $60,000 level. Meanwhile, the core traffic has been steadily increasing, similar to what we saw with total transaction value, similar to what we saw with the median transaction fee. So let's put it this way, the core traffic is what sustains the network, and it's really the institutional or high value traffic which triggers those big responses in price. Makes sense considering the position sizes that we're looking at for those guys and girls. Okay, so finally, miners rolling inventory. This is a metric we like to watch quite closely because the miners are very key players in the Bitcoin network, and they often indicate the relative strength that we see in the Bitcoin market. They sell when there's a strong price, and they actually hold back when there's a weak price. The peaks indicate periods where miners have been moving a lot of inventory off their books, and that peak I alluded to in my last on-chain reaction a couple of weeks ago, we hit about 160, 170% MRI. That's now retraced, possibly because miners have depleted their inventory, or possibly because now they're seeing that price is pulling back in the short term, and they're just waiting to see what happens next. So that's all for me for now, and we'll catch you next time. Thank you.